What's up, everybody? Happy Friday. Shad is out today, so I've got the helm. I'll be having Peter Sack on, CEO and Managing Partner of Chicago Atlantic, to talk earnings. And then I'll also have Margaret Brody on, CEO of Rubicon Organics, following Peter to talk about earnings. But before that, I know it's been a kind of crazy week. Obviously, we got the hemp ban language that was passed in the CR, which has been an avalanche of just conversation. Steve D'Angelo came out with his One Plant Alliance. I think it was last night or the day before, with a proposed plan to unify the industries, create policy around the THC molecule, and unify everything once and for all, which will take out the hemp and cannabis labels and just make it the THC industry. I don't think I could agree. I couldn't agree more with that. I think that's where we need to go, and I think that's where the industry has always been intended. The hemp and cannabis division really has come to a head, and I think it's going to be just a good step forward, potentially coming out of this ban and just unify it into one industry. With that being said, the industry, I don't want to say took a step back last night with the budget being passed in Pennsylvania without adult use cannabis being included in it, but the budget got passed last night in Pennsylvania without adult use cannabis being included in it. We did get snubbed once again in PA. However, there are members of the state Senate, both on the Democratic and Republican side, that do believe that there is a path forward in 2026, especially with the support that it has from the governor's office in Pennsylvania. So we will see. Obviously, it's going to be just continued conversation and a path forward to hopefully get adult use passed in Pennsylvania once and for all. I think obviously we'll see Virginia at this point potentially flip beforehand. I know that we talked about it last Friday with Trent. Virginia, I think the first date that the adult use rules could be ratified is July 1st, 2026. The second potential date would be October 2026. And then the last date would be January 1st, 2027. In terms of ratifying that. I think the base case was seeing it implemented potentially in July. So that's going to be a wait and see. But I did think that when Pablo stated about 6 months ago that he could see Virginia flipping before Pennsylvania, my first reaction was, well, that seems like it could potentially be an outlier. But, well, that's pretty much going to be a reality. I could easily see Virginia being implemented before Pennsylvania, which Virginia will be a good adult use flip. It benefits the cannabis, it benefits Verano, it benefits a lot of the other participants that are in that market. That's going to be a big adult use market, and it's currently an underserved medical market. So there should be some real just upward lift within that market. But and with that, hopefully we see some growth come back into the MSOs. But I guess without further ado, let's get Peter Sack up here and start to go through Chicago Atlantic REFI's Q report, and then we'll get into the BDC on the LIEN side and go through that report. So how's it going, sir?
Very good. Thanks for having me on. Great to see you.
Thank you. Another strong quarter from REFI. We know all the numbers are trending in the right direction. Portfolio strength was strong. I usually like to take these interviews more of like a qualitative approach versus the quantitative approach. And with you, I think it's interesting because you see the cannabis industry from a holistic point of view. You're seeing up and down the value chain. What's going on with the capital markets as well as what's going on operationally in the sector. So, I guess to start off, how's the pipeline looking moving into the end of the year, and how is the pipeline for the Q in terms of closing deals and getting to the targets that you guys had set?
Yeah, we had strong deployment across our funds in Q3, and it's a reflection of relationship building and underwriting that has been underway for months and months, well before that. As we look through the end of the year and into 2026, it seems like much of the activity is driven by incremental company additions, opening additional dispensaries, particularly in Ohio, Minnesota, Maryland, and also seeing renewed M&A activity, partially driven by a number of balance sheet reorganizations that are seeing assets that are strong operating assets that are in overlevered balance sheets being sold off of those balance sheets into much healthier structures. And
Go ahead.
and that I think these structures, these are good rationalizations of the industry because assets and operations that are part of overlevered balance sheets tend not to be rational actors in these marketplaces, tend to not make decisions as you would if you're in a well-capitalized balance sheets, and also just can't invest in themselves and their people and in growth.
And with that activity picking back up, and I know that you had also commented on the earnings call about ESOPs as being part of the capital allocation strategy moving forward. Where are you seeing valuations? Because I mean, I know that I think mid last year might have been a low in terms of valuations. We saw some assets trade for as little as 1x revenue in the retail space. Are you seeing a resurgence or an uplift in valuations as the market and the industry starts to get stronger?
ESOPs are a unique animal. ESOPs tend to be valued at a higher multiple than publicly traded and privately traded cannabis operators in many cases because of their unique tax attributes. And the unique tax attributes of an ESOP translate to higher cash flows and therefore translates to higher valuations. So ESOP sale transactions tend to occur at somewhere between a 5 and 8 times multiple. To put a broad range on it, one that's higher than many of the large publicly traded platforms today. Other M&A, I think, in the marketplace today is really tied to fundamentals. It's tied to current cash flows and the ability to create value and improve those cash flows. And I think that's a different theme, obviously, than where we were 3, 4, 5 years ago. And multiples of revenue aren't necessarily a part of the discussion.
And then in terms of cash flows, I mean, we talk about reform a lot. I'm not going to even start to get into the conversation on rescheduling. I'll table that for another day. And then we've also had an event this week with the hemp industry facing a ban, which have vampired revenue and sales from the state-run cannabis industry. With these events, potentially increasing the cash flows and increasing the financial strength of these assets, do you see something like the hemp ban being an event that you would say from an underwriting perspective strengthens these assets moving forward? Is it kind of a non-event until it proves itself in the numbers?
I think it's a positive catalyst for the state-regulated cannabis operators. The data around how the hemp industry has impacted the state-regulated markets is difficult to find. However, I suspect that at least some of the price compression that we've seen over the last 18 months in some of the healthiest markets is driven by hemp competition. And so as hemp companies disappear potentially over the next year, you may see increased traffic, increased volumes coming out of state-regulated markets.
And then, especially too, with the last couple of weeks, we had Virginia with Governor Spanberger taking over the gubernatorial seat in Virginia. Is that a market that you're looking at? Is that a market that you're going to have exposure to? Is that a market that you're expecting? Like I had said, it's an underserved medical market. Are you expecting an uplift, like a true uplift in sales from that market going adult use potentially in 2026?
Oh, absolutely. It's going to be very dramatic. And I think it's also one that due to its unique regulatory and geographic footprint, how it's structured within the state, is one that will be quite profitable for the operators that are there today.
And then on the BDC side, I know that we always talk about REFI with the Chicago Atlantic Realty with the REIT. You also have the BDC that trades under the symbol LIEN. I guess just before we dive into that, for those that don't know, what are the fundamental differences between LIEN and REFI when looking at those businesses?
REFI is a mortgage REIT, which means that in addition to lending against the operating assets of cannabis companies across the country, these loans are also backed by real estate. That includes owned cultivation facilities, owned dispensaries. In both cases, we at Chicago Atlantic are focused on cash flow generation the ability of the borrower to service indebtedness, and the diversity of those cash flows across vertically integrated businesses and dispensaries. But REFI, in addition to that diverse cash flow characteristics, also has cultivation. I'm sorry, also has real estate assets backing it. LIEN, publicly traded mortgage REIT, also is focused on lending to cannabis operators and some non-cannabis businesses. Does not have that real estate angle. I'd say they also serve somewhat different investor groups. The mortgage REIT obviously services the mortgage REIT and REIT investor groups, and LIEN services what is a very fulsome business development corporation investor group.
And with the BDC, they both throw off a dividend, correct?
Yep.
On a quarterly basis. And then that dividend is a function of the operating cash flow from the businesses that are in the portfolio that's generated on a quarterly basis.
Mm-hmm. So each vehicle distributes each year 100% of the income that it earns, and that income tends to arise from interest that we charge on our loans and other various fees that we charge on our loans, net of expenses.
I know the pipeline in the queue for LIEN. I think you funded $66.3 million in aggregate fundings. How do those assets differ in, let's say, from the capital allocation strategy with REFI? Are those mostly you're allocating capital towards operating companies that are going to generate meaningful cash flow? Is that against inventory? Is that against cash flows within the business? How does that differ, and what are the ideal targets, or what are the companies that you're looking at that were deployed in the quarter?
Yeah, so these are operating companies, generally in limited license jurisdictions, that to which we can make loans at relatively low leverage profiles, especially low leverage profiles relative to the broader private credit market, and ones that feature a diversity of cash flow streams. And that diversity of cash flow streams should come from either vertical integration, a diverse network of retail units, especially, and in the best cases, that footprint diversified across multiple states. And that low leverage profile to cash flow, diversity of cash flow, and geographic diversity of our portfolio and geographic diversity across the country is how we create downside protection and lower volatility across our portfolio in an industry that is fundamentally quite volatile and novel. But we had our largest deployment quarter in LIEN this quarter, $66.7 million, 13 investments. That's almost an investment every other week. 7 to new borrowers, and when we make to new borrowers, so that's 7 new relationships, 7 new companies, 7 people that we're really proud to have as part of the Chicago Atlantic family, and that now we're working to support in their growth initiatives going forward.
Now, with those new borrowers, are those in emerging markets in the States? Like, are those in adult use markets that are coming online, newly established medical markets? I mean, what's that a function of? Because I mean, that's a pretty impressive metric, especially when you talk to most and people just look at the public markets, what shares are trading at. They're like, well, the capital markets are kind of depressed, but new borrowers coming into the fold, and with a record quarter for capital allocation, I mean, that is a flashing signal that there is strength and quality within the industry that is in need of capital.
Absolutely. I mean, it's a big mix. There's still operators investing in growth in this industry. Yeah. There's exciting things going on in Minnesota today, exciting growth in Ohio today, still exciting growth in Missouri today. There's increasing M&A around restructuring balance sheets, and that was a part of the deployment today. And then we also participated in Cresco's new term loan, and we're really excited to be a participant in that and watch their growth and watch their execution on their plan.
And then also on the REFI side, you had also issued that $75 million revolving credit facility to Verano in the quarter. And I mean, that was, I think, a record revolver in the industry. Do you see that as a sign of the times and a maturation of these companies' cash flow profiles and just the way that they're functioning? And can you see those vehicles being used on several of their peers, let's say, moving forward, as it makes sense to use a revolving vehicle versus just siloing all this cash on your balance sheet and having to manage a cash flow cycle, that's just less efficient.
Yeah, absolutely. Both the cost of capital is uniquely novel for cannabis companies, and also the flexibility that we're trying to bring down the friction costs of financing in this industry, and this is one good example.
Yeah. And then I guess in terms of future outlook, with both pipelines and both businesses, I mean, what's exciting you, or like what's new, and what are you looking forward to, let's say, in 2026 in terms of potential trends to allocate capital towards?
Mm-hmm. I think ESOP operators are going to be a new source of capital for this industry, that due to their lack of constraints of taxes. I think they're going to be a new buyer and player in M&A markets across the cannabis industry. So I think we're going to see those ESOP platforms that want to invest in growth doing so through M&A, and I think that's going to breathe a new breath of life into many markets that simply just don't see a lot of M&A activity today, and a lot of inorganic expansion activities.
Those ESOP structures, are they primarily retail, or they're full vertical operations that permit that structure?
Both are permitted. I think in many cases, retail can be a better fit because the revenue streams are often a bit more diversified and feature a bit less volatility and concentration risk. But both can be a suit.
Okay. And then I guess in closing, how are you looking at this I guess hemp ban objectively? Like, is this do you think that this is an inflection point to where we start to see the conversation truly catalyze around reform and around cannabinoids? Or is it kind of like the buck stops here and then we still move forward as an industry, and there's just a lot of limbo? Because personally, I feel like the genie is going to be very hard to put back in the bottle when you're talking about a multi-billion-dollar industry that was built on the back of hemp, that's parallel to the cannabis industry. And at the same time, it would just make sense to further the conversation, further regulation, and just create parity between the two in a one plant solution.
Yeah. I think the intoxicating hemp market has done a lot for the THC broader ecosystem. I think I think that there are a lot of very strong, disciplined operators that built some incredible businesses in a short amount of time. And I think it's a shame what could happen to those businesses and people that have built some incredible organizations, and the jobs that will be lost. I think from a conversation standpoint, I think the intoxicating hemp industry expanded access to THC products in states that don't have strong infrastructure, expanded access to people that are looking for to use cannabis for medical purposes in states that don't have a strong rubric today. And the hemp industry brought into the THC umbrella supporters that have never supported the state regulated market very well. These are people like Rand Paul. These are people like Ted Cruz. These are people that I would love to see co-opted into the debate on rescheduling and safe banking, and pivot those positive words for the intoxicating hemp industry into a broader discussion of the THC industry as a whole. And perhaps, we'll see one door close and another door open as a result of what happened here. And I think we saw something similar in Texas, that when Texas passed legislation to restrict sales of intoxicating hemp, they also expanded their medical program. And I would love to see this conversation around intoxicating hemp at the federal level and in Congress pivot to support of rescheduling and movement on rescheduling.
Yeah, I don't think you could have said that better. I think that it needs to be said that these prominent voices, whether it be Ted Cruz, whether it be Rand Paul, if you took exactly what they were saying and just took out the word hemp and put it in cannabis, it's the same thing. It's the same argument, and the people need to realize that, because that's how we truly move forward. Because you are absolutely correct. Hemp has done great things to normalize THC. It's done great things to expand access to THC. However, the true free market that was rolled out with it was a gift and a curse at the same time, because it allowed nefarious activity to flourish, and there were bad actors, there are bad actors, but there was a lot of good And the quicker we can get that conversation kind of just amalgamated to where it's all cannabis and these people understand it and realize it, and we have the Ted Cruz's and the Rand Pauls backing us, we can go pretty far. Hopefully towards ultimate reform that we're all getting towards.
Yeah, absolutely. And in the interim, we at Chicago Atlantic are focused on making attractive risk-adjusted returns, lending to some of the best cannabis operators in the country.
Absolutely, and it seems like the demand's not waning. So look forward to having you back in Q4 and going through those numbers on both sides, and hope it's another strong quarter of growth and another strong quarter for capital allocation. But Peter, this has been a pleasure as always, and look forward to having you back on the next Q.
Thanks for having me.
Thank you. Well, I hope everybody enjoyed that. That was good. I mean, Peter could not have been more correct. We need the unified conversation around cannabinoids. These voices that are loud and very well respected, especially like the Ted Cruz's of the world. People have their opinions on the man. I've knocked him, and there's several things that I don't agree with him on, but he actually understands the cannabis conversation. He's a prominent Republican senator with a large platform, a large voice, and a very respectable resume. And having somebody like that perpetuating our cause and reinforcing what's right and what's wrong around this conversation is a very, very powerful thing, and hopefully something that we get in the very near future. And now we're going to go up north to Canada and bring in Margaret Brody, CEO of Rubicon Organics. How are you this morning?
Well, it feels very dark and gray compared to where you are down in the south, I gotta say.
Well, it's cold down
Winter
here.
is coming.
It's 60 degrees. It's winter in Florida.
Okay, well, that still looks pretty bright.
Are you in BC? Are you in BC?
I'm in Vancouver, but I have to say, you walk into our greenhouse facility and it's like walking into a biosphere. I mean, it's just incredible, right? Like walking into the plants and the lights and the warmth midwinter, it kind of always makes my day. And I like to say, when it's raining in the city, it means it's snowing on the mountains and I can go skiing. So
yeah,
gotta take the positives.
I've expressed to you my great like for Vancouver.
Yeah,
and the surrounding areas. I mean, it's got everything.
Yeah.
Obviously, there's some gray weather, but at the same time, you can go to the mountains. There's a lot to offer. A lot to offer. But the quarter, 15.6 million in revenues, up 16% year over year, 1.7 million in EBITDA, 3.8 million year to date, and 43 million in net revenues year to date, up 25% year over year. The Rubicon story is working. You're obviously growing, domestic and abroad. What is working? What's attributing to those numbers? Is it the all-in-one vapes? Is it the premium genetics, the premium brand that's resonating? I guess walk me through really just at a base level, what's working this year?
Well, I think the word we talk about, we talk about two words, elevated experiences, and that goes all the way through our business, whether it's working with a customer, a retailer, a shopper, a consumer, working with our people, our suppliers. We want to be better every day at what we do. And that starts with quality. So you've got to have a quality product. Canada right now is starting to build the beginning of national brands. We are just at the beginning of it. And so, for us, our vision is to be the most trusted our house of premium cannabis brands. Every word there being important, right? Like trust, premium, and brand. And so we're not selling wholesale weed. We are building our brands and building it brick by brick. And that comes from our people and what we do. Look, this year, I think our results could have been even better, but actually excitingly, we are investing. We're investing to get bigger. So we've managed to grow our business in the last 3 years on a single asset, which is actually pretty amazing when you think about it. We've almost doubled the revenue over that time period. But we've used contract manufacturing, contract grow. We didn't want to risk the balance sheet in the down market. So beginning of this year, saw the turn, said, hey, we're going to go out and find how we can grow this business. We had our debt refinanced, 6.75%, very institutionally investable. Went out, found a fantastic asset an hour and a half away from ours. It's called Cascadia. We now have an indoor grow asset, and we have a hybrid greenhouse, which is kind of the ideal situation in terms of premium weed. One's organic, one's not going to be organic. We're going to test out some organic and see what we decide to do, but just in the first instance. And from that, we've invested a bit this summer and this year since we did that acquisition, because it's going to really turn on at the midpoint through next year is our expectation. We're going to hit the quality standards we want. I'm really excited about the future because I think if you've got the channel and the brand and you're on shelf in Canada, there's still actually a ton of growth in this market.
Absolutely. Absolutely. And with that, I don't want to call it a bifurcation, but with the differentiation now, and you have these multivariable assets, you have indoor, true indoor, and then you also have the greenhouse. How does that change the business strategy? Are there genetics and varietals that you're going to grow in the greenhouse that, let's say, get extracted down into vapes, and the premium brand, the premium flower, and the certain genetics that go into the indoor? Or is it kind of just all mixed and let's see how it goes?
That's a great question. Look, we're looking to be, I think this is probably the first time I'm saying it, the world leader on genetics. And we've got a long way to go. There's some amazing genetics groups out there, but we want to represent, and we're here to build it and bring. We think that if people can also trust us with their genetics, we can do them justice in terms of the way we cultivate and grow and give props to the people that started them. So we think that's a really important part of what we do. We used to call it Delta, now we're calling it Pacifica facility, and at Hope we're calling Cascadia. At Pacifica, it's an all organic facility. So our Simply Bare organic line is always going to come out of there because, if we say it's organic, it's going to be organic.
Okay.
Seems pretty basic, but turns out not everybody does that. And certain plants just absolutely love that. We find some varietals, and I really always go back to the Kushes. The Kushes don't love that environment as much. I mean, they express really nicely, but from a yield perspective, we think they're going to do a lot better in indoor. So in particular, the heavy hitters that go into our 1964 brand, we think that they'll really love it. In fact, the first strain that we're growing out of Cascadia is our Comatose. It won Flower of the Year back in 2022. We're just really excited to see how it does there. Our gut instinct is it will do really well. I go back to a lot of people don't remember that a lot of these genetics, either were grown outdoor in big, or they were grown in really small little rooms. And that's where they were cut. And that's what they were, the growers that originally cut these phenos, it was all about maximizing within an indoor environment. So I'm curious to see, we've always loved what the sun does and what the power of that and the living soil does to plants. I'm really excited to see what they're going to do in this environment.
How are you thinking about genetics in terms of, let's say, cloning versus seeds? Like, is Rubicon currently enacting any sort of research or engaging with any other third-party organizations that are really kind of driving home when it comes to like diploids, triploids, like you leveraging those genetics from a seed standpoint to increase yields on the plants?
So, not at this stage. Look, I know Organigram's doing a lot of work around seeds. There's some other companies doing it. I would love to be planting from seed. That would be fantastic. We are cloning off of living plants at this stage. Yep. We do have a whole genetics program. We don't really talk too much about what we do because we like to keep it under wraps. But certainly from investigating what seeds can do, probably more to get them into a mother and veg state to be able to clone off of if they run. When I say if they pass all our tests. So anything we do, we've got lots of wonderful genetics we're pretty excited about. They go into a small commercial trial with just a few plants in our greenhouse at Pacifica, and then from there they actually go through a tasting. They get tested. They get we look at yield. We do all that stuff, and then they all go to smokability as well. And before we decide, but it's not only looking at yield in terms of throughput and cost of production and efficiency on our gross margin, but taste, flavor, and where the consumer is going, because we find each of our brands, the consumers are looking for different things, and it's really important that we're bringing those new. We don't want to be following on trend. We're aiming to get to leading on trend.
It's easy to see where the puck is. It's hard to go where the puck is going. Yeah. In terms of trends, how are the vapes performing? I think you've seen category growth in the vapes since launch. Are you seeing sustained growth? And is that something that you're evolving, let's say, the SKUs to match consumer interest?
Yeah, great question. Look, we launched into the 510 vape category. So last year, really fantastic launch. Very pleased with it. We launched with a number of SKUs very quickly. That's done what we thought it would do, I would say, in 25 in terms of our expectations. So really happy with that. I always want to get better. So I think that's just a professional habit. Our all-in-one we launched this summer. It actually on Wednesday night won Best New Product of the year. So there's the Kind Awards, which are the Bud Tender Awards, which we care about because I can't go in and vote. We can't pay for it. It's about the bud tenders choosing what they love.
That's what
and our all-in-one won Best New Product, and our Blue Dream 510 vape won Vape of the Year. So I would say that it's all coming together.
Yeah. So not to cut you off, when you look at the vapes, is it tiered the same as with the 510s? Is it tiered the same as, let's say, premium, mid-tier, value? And I'm assuming you're sitting in the premium tier.
We're sitting in premium, yeah. And with all-in-one, we'll have 4 in market by the end of the year, but we've only really had 1 in market all summer. So it's really hard for us to say how we're doing. We've still got some work to do on that in terms of getting those into market, launching them, distribution, etc. There's certainly we're playing in the full spectrum resin extract. There's a lot of it's sort of that category, and then the largest category in Canada is a distillate flavored vape, and we're not playing in that category. It's not a premium product in our view. We don't believe we have a right to win. We think it's a race to the bottom on cost, and that's great, but that's not our differentiator.
Yeah, I'm with you. If I was in your shoes, I'd be not staying away from that category because I'm sure the velocity of units makes a lot of sense. Yeah. They're high margin units, but distillate carts to me, it's like smoking menthols. Or what? It's like well lit.
That's harsh. But
yeah.
But I'm not gonna lie. I've never tried. I've tried one once. I've smelled them a lot. It's not for me. But it isn't to say it's not a really good part of the market, and there's a lot of great companies there.
Correct.
That's just to say that's just not what we're doing. We at the same time,
full spectrum live rosin all-in-ones. That's the product that I would gravitate towards.
Yeah.
So that's what I'm
we're doing live resin. The rosin, actually, the margins, it's really tough to make that work in the viscosity work. We can do it, but where you have to price it, there's just not that much market there at this stage. We're looking at it. I think interestingly, what we're seeing in flower, and there's some really interesting dynamics across the world, what's happening in flower now is, we're seeing more production come online here in Canada in flower. So Kronos turned on more. Yeah, more grown. Village Farms have turned on more. Some great teams that I have a high respect for, doing good things. And a lot of that product's bound for export.
I was going to say, Village is shipping it out as fast as they can.
And they're good growers, right?
Great. I've walked those greenhouses. They're it's like the Willy Wonka of weed. That facility is massive. Yeah. Michael took us through all the cannabis and then straight over to the tomatoes, and it was impressive to say the least. But yeah, they're crushing it over in Europe, and they're doing quite well domestically too. But with your new grow, I know you're planting in 2025. When are you expecting that to feed through to the numbers? Q1 or Q2 2026?
Look, we believe that we'll have some product to sell in the first half, but it needs to hit our quality standard to go into our brand. So we're going to monetize what we have, but we're expecting at our lowest margin product to turn into, whether it goes into our Homestead brand, which is now, so we're saying midpoint through next year, we expect 1964 quality flower. That being said, I'm like the disappointed parent who went to the team and said, well, the very first batch that came out of Pacifica launched Simply Bare Organic, which is sort of the loved craft premium, super premium brand in Canada. That's all I said. I just smiled and said that. And this is a team of high performers who are hard on themselves. And I know they're going to work very, very hard. But look, we're very realistic and we want to get it right rather than get it fast. So it's that balance of as fast as you can, as slow as you must. Let's get it right. Let's make sure we're putting banging product quality out into the market. So we're going to have a hit sort of this quarter and until the end of June. really in terms of the cost, because we're going to have incremental cost. We're also
Yep.
investing in our business. We're investing in more people for the throughput. We're transforming, and that's fun. But it's our EBITDA would have been a little bit higher if we weren't transforming. But it's the right thing to do for the business, for the growth. And at this time next year, I think you're really going to start to see those results. Look, would I love to do it sooner? Of course I would, but I'm gonna look to under promise and over deliver.
Yeah, I mean that was my next question, because I know that I think EBITDA was down 15% year over year, but it was justified due to the expenses and the CapEx investments that are going on in the business. So do you expect, I don't want to call it a CapEx cycle, but do you expect investment to be steady up until, let's say, June of next year, and then these investments and Cascadia coming online should bear fruit, let's say Q3, Q4 of 2026, to continue and carry with the growth of the company, both on the top and bottom line?
That's exactly the plan. Look, we have projects called Sweat the Assets. Well, we see that inflection point coming last summer, or this summer, we sat down and went, we're going to have an inflection point here. What are we looking at to drive incremental gross margin? We just took down on Monday some additional debt. So we're about 50, just under 50% levered on the asset base. So, at 6.75%, happy with that. Great position to be in, good balance sheet. And those projects, we have ROI. We have a series of projects. And as I've said to you before, was a cheesy business student who we're ranking those projects on complexity, OPEX, CapEx, ability to execute. And we're ranking, and we'll go through them, because, I could have a list $20 million deep to drive gross margin, but is that the right thing to do? So we're going through that assessment, and there's going to be more news on that. And, we'd like to improve our gross margins. It's the one thing that we've got some work to do, but we needed to get to here to do that. Between the projects we've got lined up plus Cascadia, we're very bullish that there's a massive inflection point for the business midway through next year. And we've just continued to de-risk where we are at. So really feeling great.
How are you looking at the pre-roll market? I know that we talk about premium flower with you a lot. We talk about vapes a lot. Do you see the pre-roll market being like where the consumer is going to go ultimately, as it is convenience? And is that, for you being a premium brand and having a lot of attention to detail with the quality of your product, is the pre-roll almost a catch-22? Because it's almost, I don't want to say it's difficult to convey premium quality product within a pre-roll, but it's one of the trickier products.
That's a really good question.
In the industry. I
thought that at first, but there's a couple of major trends happening, and the largest is the rise of convenience. So we've seen a massive increase in pre-rolls in Canada since the beginning of this year. We're really happy with that. Across all of our brands, in particular 1964, it's just been great. Look, all of our pre-rolls, it's all flower. We're not putting trim. We're not it's our flower going into those pre-rolls, and we're very clear about that. And we work very hard to make sure that the quality of the pre-rolls, when you buy one of our pre-rolls, it's going to meet your expectations and be great. Part of that is not just what it looks like. It's the smell, aroma, smokability, the white ash burn. To a connoisseur and a premium consumer, they understand and know all of those things. To somebody who doesn't know, they'll be like, oh, this is a nice one. I like the effect. But if you're a connoisseur, that's going to be banging all the time. And that's really important for us to get right. So look, I think you can differentiate in pre-roll. I think the quality of the flower that you put in your whole flower demonstrates what you do. And as long as the consumer experience is consistent between those two, you're in great shape. We're looking, and I'm going back to our vision, trust, most trusted house of premium brands. And so we want to build that trust with consumers and build national brands that people come back to time and time again, so that even if you're trying a new genetic from us in a pre-roll, you can assess it, because we're going to grow a beautiful genetic, a beautiful quality product. And that genetic might not be your thing, or it might be like the best new thing you tried, but you're going to know that it's done well, and you can come back into the portfolio, and there's going to be something you can trust and rely on with your hard-earned dollars.
Absolutely. And then I hate to bring this up, but it's the Canadian equivalent of rescheduling.
Yes, do it.
Excise tax. There were a lot of rumblings on Twitter that November 4th was going to have a surprise with Carney addressing the excise tax in the new budget. Obviously, it came and went, was not addressed. Do you think that this ever gets addressed within the market? Because I mean, I was talking to an operator yesterday about California, and California is one of the largest markets in the United States. It's probably the grandfather in terms of markets in the United States, but it's a mess in terms of markets in the United States due to bureaucracy and just they don't want to kind of turn the ship. Are we looking at that, let's say in Canada, with the excise tax as it is what it is? This is what the government wants implemented, and the bureaucracy is just take it or leave it to an extent?
Here's my take on it. Our new Prime Minister, Carney, is an economist by training, very bright man. He's building he's focused on export and nation building projects that are not reliant on the United States. And it's a smart thing to do. We as a country have been reliant on the United States, and they've been a fantastic neighbor and best friend, but we've got to make sure we're going to other markets. He's going from highest to smaller. We are not as big as mining and natural resources, and then forestry, I'm sure, will be next. He will get to cannabis, in my view. It's going to take a couple of years. That being said, what's just happened and we're a growth export industry with world-class companies, right? I mean, that have led the way. So he should be, and we need to beat a steady and consistent drum on that message. So when he gets to it, he understands the issue, and there's people that are well-versed in it. That being said, in November 4th, the federal government actually recognized, and I don't know if this is ever going to be put together, I think it will in a couple of years, that the pricing that they were paying to veterans, which was $8.50 a gram for reimbursement, they reduced it to $6, recognizing that prices have dropped in the industry. That being said,
that's a fair point.
So they've dropped the price to say it should be around at least $6. The excise tax, the minimum is based on $10 a gram. So they've acknowledged the difference there. I think that's a good sign. Now, in a country that's doing nation building projects and investing, are they going to give up tax revenue? No. So we need to start tackling this in different ways to say, give us 50% of the excise tax where we can use it as tax credits. And I think the government's probably more likely to do that against R&D, against innovation, about capital spending. They've put in some changes into the budget where manufacturing expenditures can be 100% deductible in the year in which they're incurred. So if you build a building, bam, right again, like they are investing.
We did that here, and it's working.
Yeah. That was a great idea.
Great, fantastic idea.
Yeah.
Unfortunately, I knew a lot of people that did that with hemp beverage canning lines, which foresight is 2020. I mean, hindsight is 2020, obviously. But I mean, obviously, another strong quarter. A lot going on in the Rubicon story. Moving into, not to jump, moving into 2026. What is the number one initiative as far as you're concerned within the business?
Cascadia.
Cascadia. Okay.
Yeah. Look, there's a lot of other things that I'll be out and looking at for what's next for the business, but execution on your first acquisition and delivering that step change in our business is critical. Yeah. So this year we've been very busy in getting all the things done to set up the situation to do that. We have an outstanding team. We've got the right assets in the right locations. I think we're situated very well, but cannabis is a story of execution. We've seen a lot of promotion over time. We execute on Cascadia, and it will be difficult for the market to continue to not pay attention to us. I was at Small Cap Discoveries in Toronto, Planet Microcap in Toronto, and I listened to a number of the stories. The growth companies, with over 20% growth in revenue year on year, are trading at 10 to 12 times next year's EBITDA. Yeah. Our industry is trading at 5 to 7 times last year's EBITDA. Yeah. When we start demonstrating those numbers time and time again, investors are not going to be able to they're not going to be able to ignore it. And look, our business is today trading very similarly to where it was in the new year. And we have gone out, purchased an asset, strengthened the business, driven growth, and yet it's still not recognized in the stock. So we've got to deliver. And I'm okay with that because I know we're going to keep focusing and delivering. We've got a track record of it.
I think everybody that's watched the show and has paid attention to the story is confident that we'll get that growth. We look forward to having you back next quarter. Hopefully it's another quarter of growth. I'm sure we'll have you on in the meantime, in the interim, and then hopefully getting out to Delta in 2026 once the weather turns in Vancouver. I'll shoot out
I
there.
got to tell you one last thing before we head off, because it's kind of fun and you guys are going to see it from us very soon. We had the Kind Awards, which are the bud tenders vote on in Canada. Big deal. And Rubicon won Flower of the Year for the 3rd out of 4 years.
Okay.
And also the write-in, like when people write in their favorite product, our pink drip under Simply Bare won. We're just so proud because that goes to show the power of premium flower and consistency of brand being built. So I just wanted to give a shout out to my team because I'm here to say they're just fantastic and great job.
That's important. Obviously, it's important to recognize everybody within the organization, and it's important to recognize, especially when your peers are saying that your product is the best and top of category versus some of the other. We've seen a lot of award shows in cannabis.
You don't want to be the one to wonder, right? Like, this is about consistency. That's what builds the brand promise and getting better every day.
Yep, absolutely. Mark, this has been great. Look forward to having you back on NXQ, and congrats on the quarter. And we will speak soon.
Bye.
Have a good rest of your day. That's I think it's going to wrap everything for today. I know it's been quite a tumultuous week, to say the least, both in the U.S. on the hemp and the cannabis side. We got the PA news, and I hope everybody found both of those interviews informative. Shad will be back on Monday, and I'm sure we'll have a lot to talk about next week, with some headlines coming out potentially over the weekend, and cannabis. Everybody have a great weekend.
Hey everyone, thanks again for watching here today. Listen, if you're getting value from us here at TDR, make sure to check us out at TDR Plus. It's our exclusive membership community. Why? Well, you'll see CEO interviews that go beyond business, showing a personal side that you won't find anywhere else, including the biggest names in the industry. Plus, you'll get insights from analysts and day traders on where the industry's headed, both short-term and long-term, and a direct chat group with our team. It's only $7 a month, just 25 cents a day, and it helps support everything we do here at TDR. If you want to join, just click the join button below and become a TDR Plus member today. And once again, a big thank you for being part of our community. So that's it for today. And again, thanks for watching, and I'll see you next time.